All right, welcome back to Eyes Open Media. So let's get into this article before I go and do the report for the main channel. All right, so MBRI, I don't know what that stands for. MBRI, Monetary Banking Research Institute. I don't know. I've heard it before, so it could be. Okay, MBRI. Comfortable with banks FOREX entry. Okay. So we know that this is from Iran. We know that the CBI governor was talking about the entry of banks, commercial banks, to be on the forex and to remove the parallel, to bridge the gap of the parallel exchange rate and to have a more of a free floating market driven exchange rate. Okay, so the MBRI, I guess, is saying, yeah, we're comfortable with the banks doing the forex entry. Okay, so the deputy head of the Monetary and Banking Research Institute. Okay, so that's what it is. Okay, so the Monetary and Banking Research Institute. That's what it is. Okay, so the MBRI rejects claims that the entry of banks in the open foreign exchange market could push them into unwanted and unhealthy market speculation, a situation tried and tested in the past. But Kamran Nadri said that in the years of currency controls in past, or actually currency control in place because of the international sanctions, the possibility of banks engaging in speculative activities had existed, and for that reason, all lenders were banned from entering the tempting hard currency market. Okay, it says because the currency control in previous years, a competition had emerged to buy as much foreign currency as possible. Nadri told news agency says because during the sanctions, the banks had no real need for hard currency. They possibly wanted to enter the sector for speculative activities, and that was why restrictions had been put in place for them, he said without elaboration. The CBI this week said commercial banks can now trade in a parallel foreign exchange market. Okay. And he says that the banks are allowed to buy foreign currency from their CBI this week. Said commercial banks can now trade. Okay, we already talked about that. What am I doing? Foreign currencies from their clients and trade with it at the market rate. Okay, he says, however, moreover, let's see. It should be however, but they speak more. They say moreover. I don't. Yeah, it's just a culture thing. Okay. Moreover, exporters also have the option to sell their forex revenues to banks or deposit them in their own bank accounts. Okay, so let me read that again. It says the CBI this week, today is August the 3rd. So this week, the CBI this week said commercial banks can now trade in a parallel foreign exchange market. I don't really don't know what a parallel foreign exchange market is. I don't know. Are they talking about side by side? A parallel exchange market is, parallel side by side. So I don't know. I don't really know what that means. It says the banks are allowed to buy foreign currency from their clients and trade with it at the market rate. Okay, so the banks are allowed to buy foreign currency from their clients. The banks are allowed to buy foreign currencies from their clients. Now, who are the banks' clients? Is that normal people, or is that industry? I mean, who are the bank's clients? The CBIs? I mean, the central banks of other countries? Is that who are the bank's clients? Okay, because I mean, what normal people coming in are going to have foreign currencies? You see what I'm saying? So the bank's clients could be central banks from around the world. Okay, so it said the banks are allowed to buy foreign currency from their clients, which is probably central bankers and brokers and things like that from around the world, and trade with it at the market rate. Okay, so when the banks buy the foreign currency, they're then allowed to put trade it into the market rates. Okay, they're able to trade with it at the market rate. So if they buy U.S. dollars, they're able to trade it at the market rate. If they're able, they buy, euros and yen and what's the other one? Ruble and Rupaya and Won, we're able to trade it at the market rate. Okay, and I'm pretty sure they're also talking about the Riel as well, trading at the market rate, which is like 30,000 plus. There's really no market rate for that. It says, moreover, exporters also have the option to sell their forex revenues. Okay, so there's no Riel. Okay, so when you talk about market rate, Riel doesn't have a market rate. Okay. I mean, I guess it does. It's 30,000, but you can't trade it up and down. Okay, on the forex because it's not on the forex, right? I don't think the real is on the forex. You know what I mean? They're trying to get it back to the forex. Okay, they're trying to go back into the global market economy. Okay, same thing with the dinar, right? So most likely these banks are trading in the currencies that are actually on the forex that are going up and down, like the dollar, the yen, the won, and things of that nature, and Great British pound, the Swiss, and things of that nature. So when they make their profits, it says okay, it says export. It says options to sell their foreign revenues. So when they make profits in the foreign exchange markets, they can put their profits to banks, um, or deposit them in their own bank accounts. Okay, so let's say a guy is at a bank, and he brings in somebody. His client brings him USDs. He then takes the USDs and deposit it into the banks. But of course, they don't do that. They take the money and then they go and they try to make more money off of that money. So somebody comes in with 100,000 USD and they deposit it in his bank. It goes in electronically. They take the USD and then they put it into the forex market and they try to make money on it up or down. You know what I mean? They can short it. Or they can do a buy and sell. You know what I mean? For profit. Okay, so. And then once they make a profit, they can put it back into the bank, or they can deposit it into their own bank accounts. Okay. Wow, that's interesting. I wonder. I guess each bank is. I guess each bank's gonna have their own regulations on how clients and customers or people that work for them are gonna be able to do that. Maybe they'll have like 80-20. You take the money, if you make a profit off it, you get 20% of it, and the rest of the bank gets the rest of it. I don't know how that works, but either way, banks should not be betting your money. That's the worst thing banks could do. I know they don't want the money to sit. You know what I mean? They don't want money to sit. You know, they want to make more money off your money, so they put it in real estate and they do all types of stuff with it. But that's risky, man. You're taking people's money and that should be in the bank, and you're trying to find ways to flip it and that's what's causing banks to this is one of the biggest reasons why we have ATM fees and all these fees at the banks, is because they lose a lot of our money. Okay, for betting on the money. Okay, they don't have all of our money. If everybody goes to the bank right now to pull all their money out the bank, the banks don't have their money. You know what I mean? The banks don't have, because it's invested. A lot of money is thrown down the toilet in bad investments, or it's caught up in real estate. So a lot of these banks don't have everybody, all the members' money. Okay, this is what's called a bank run, and when you see it in other countries, especially in Europe, you're seeing a lot of bank runs in Europe where people are scared of the economy and what's going on in the country, and so they run to the ATMs to pull their money out, and the bank doesn't have enough money for everybody because most of the money is in real estate markets or in some other type of investment. Okay, now credit unions are different. Credit unions, all the money is there. Okay, if you're in a credit union, they don't take your money and invest it in other places. Credit union keeps your money there, and yeah, and they're, and of course, credit unions are more like a loyal type of thing. They actually keep all your money is there. Okay, if you go to a credit union, everybody in a credit union, you should be able to get all your money back because they don't invest your money. They find other ways to generate income. And that's how big banks should be. But we're talking about corrupted people that run these. The bankers, right? As the elite bankers is what we call them. So why do we think that they're gonna just keep our money safe and look out for us when they're doing corrupted stuff all around the world, with your money? Okay, a lot of the corrupted things that go around the world, that happen around the world, are being done with the money you deposit in these banks. Unfortunately, and it's kind of interesting that a lot of us started catching on to this about 3 years ago, and then it started coming to the light a lot, on the mainstream. I mean, even mainstream media and news outlets started talking that your money in the banks are being used, and that's because we had the recession that hit, and we saw AIIG, and we saw these insurance companies, and we saw these banks failing, and people were wondering, well, how are you failing when you got all this money? It's because they were putting their money into they were taking your money and they were putting it into bad investments. And when those investments collapsed, like the real estate market, the banks went under, and people were like, how will you go under when you're a bank and not a real estate company? And it's because they took your money and they invested in the real estate market, and the real estate market crashed, and there went all your money in the real estate market. Okay. It was supposed to be you thought it was safe in your account, but yet it's in the real estate market. Okay. And that's what happens. Okay, that's what happens to your money. And that's how most of Americans and most of the world found out that the banks take our money and they invest in it into all types of different things. They invested it in casinos and all types of stupid stuff. You're like, what in the world are you doing? And that's just the game they play. That's why they're called the elite bankers. Okay, banking cartels. They don't care. Okay, as long as as long as they stay rich, they don't care what they do. You know what I mean? And that's the problem that we're having around the world. Okay, it says here that now that currency restrictions have eased, okay, it's not been completely lifted, because America still has sanctions on the rial, and also sanctions on the American people. They're doing business with Iran. So it says that the currency restrictions have eased, but it hasn't been fully lifted. Okay, it is logical for banks to also trade in the currency market. Okay, so they're taking their steps here, and at some point we're going to see the USA lift the banking sanctions on Iran. Okay, so they're just getting prepared for that. They're saying that they're easing their way towards it, and it's coming. Okay, so it says probably because oil prices have relatively improved. Well, not no more. So this article came out today, but this conversation could have been, 3, 4, 5, 6 weeks ago. You know what I mean? Because here it says that because the oil prices have relatively improved. Well, today the oil prices are back around $40 a barrel. So it's all that gains are gone. So this article could be, this conversation could have been 3, 4, 5 weeks, 6 weeks ago, but the article comes out today. Okay. It says improved in access to frozen assets made easier. Said that the government's FOREX reserves have increased, he said. Okay. Single rate aimed. Okay. So they're still so they're trying to get that single rate. Okay, it says banks enroll in the foreign exchange market will not lead to a monopolization, and the naysayers and critics must back their arguments with reason. Okay, so there you have it. So in the more competitive forex rate, so the MBRI. All right, peace out, everybody.